get the whole story.
Welcome back to the Trading Bell Show. We are right here at the Kenya Power and Lighting Company speaking to the CFO to understand and unpack the numbers. Let's get back to the numbers, and I want you to provide some details on your operating costs, which went up by 1.72 billion. Could you provide some breakdown on the factors that led to this increase?
Now, on the operating cost, you're right, it went up by 1.7 billion shillings. Now, two key drivers for this.
Yeah.
One is that we've been in a period where there's been quite a bit of constrained operations in terms of those litigation around some of the procurements that we had, and there were quite a bit of reforms going on in the company and all that. So a bit of the programs that we would have done were not done. So it would appear like it was a cost saving as such, and yet really certain programs were not done. And those programs usually go, they affect the performance of the utility. You'd find that some maintenance programs within the network were not previously done, and so the cost was almost like really quite suppressed in the previous period.
Yeah.
Now, so the cost that we have now is quite reflective of really the operations that are happening.
Okay.
But then the other side of it is that we had some additional staff. Over the years, we've had staff transition, retirements, and all that. Mm-hmm. But then, and also based on the expanded network, quite some expansions. That, we manage also the last mile connections and all that. So really, there was quite some need for increasing of stuff. So we onboarded some technical staff in the period, and that takes to part of the cost. And finally, just the depreciation. As we invest into the network as well, there is the depreciation expense that comes with that. So those three really were the main movers of that 1.7 billion.
Okay.
Yeah.
I was curious to understand about your negative working capital position and any measures that you're taking to mitigate this.
We've come a long way on the negative working capital.
Yes.
This will be the 6th year running on a negative working capital. And so it's important maybe to understand where that comes from.
Okay.
During the period, I think that was the Jubilee government, there was quite a bit of investment in the energy sector. And this was in terms of access to electricity. Yeah. That is increasing access. We were doing 1 million connections a year for the customers and all that. There was quite a lot of capital intensive really investment at the time. There was also the 5,000 megawatts plus to increase generation. Okay. Prior to that, we had quite some serious shortage in generation, and there was a period where we had a lot of rationing. So during the I think it was the first time for the Jubilee government, there was a lot of investment in the generation space. There was a lot of investment in expanding. But the unfortunate thing is that the key demand driver projects that had been planned to take up this additional generation, like the Konza, like SGR, we expected it to be electric, like the industrial parks and all that. They quite delayed. Yeah, some of them didn't come into being, and others were really delayed. So we ended up in a situation where we almost like had some overinvestment within the grid, substations and lines, major lines that really the customers that they were to serve had not come into being. So we actually had utilized a lot of debt finance in such projects. And so now there was a time when the grace period had actually lapsed, and now we have started repaying the loans and all that. So this shifted into current liabilities that were now outweighing our current assets into that negative capital. And as I said, we've come a long way. By, I think it was June 2020, we were at negative working capital of 74.8 billion shillings. So right now, as of December, it's about 42 billion. So that has come quite low, and we keep on really very intentionally working on that, realigning our working capital, and we expect to see quite a major improvement when the balance sheet restructure is done, because quite a bit of that is the annual debt service, which we expect that would go lower and really improve our working capital.
Okay. Yeah. Let's talk as well about your increased revenues and operating profit that you witnessed this time around. And I wanted to understand what conditions really do you attribute this, especially on the customer's perspective? What specific market conditions or changes in customer behavior contributed to this particular growth? And are there expectations for continued growth in the future? Just trying to see ahead. Are you seeing this trend going on?
Yes, Maina. Now, to your first question around what really, from a customer categories perspective, how this was, how it fed into the revenue growth as such. It's important to highlight that we saw a slight decline in terms of the small commercial customers and the domestic customers. And over the years, we've been seeing growth in these particular categories. But for some reason, there was a slight decline. And so for small commercial, I think quite a bit of them have struggled since COVID. And so really still within that space, there's quite a bit of a challenge as such. Some of them are quite thriving, but when you look at the number of businesses that have lowered their consumption, then really that is where we saw some drop. On the domestic side as well, there was some slight drop on that during the half-year period. We could relate this to quite a bit of impact from the way the tariff was not necessarily increased, but realigned in such a way that the lifeline tariff was the band for the lifeline was reduced from 100 units to 30 units. So quite a big chunk of the domestics that were consuming less than 100 units moved from lifeline to ordinary domestic, and so one would want to adjust a bit of really the consumption that they are doing to really remain within the same amount of bill as such. So on the commercial and industrial side, there we saw quite some good growth, and that is what drove the 2.7% that we've seen over the half-year period. We saw the industrial customers take up a bit more power. There are those who increased production, and there are some new ones that came on board. So we expect, and to use the second part of your question, we expect this industrial consumption, increase in consumption to continue for the remaining part of the period. We had some challenges as well in the earlier parts of the year, where the flow of key materials like meters really was not as had been expected, because that's when we were just finalizing the issue of the litigations around that and all. So right now, and deeper into the half, and now going to the second half of the year, we've seen the good availability of meters. So we expect that the rapid results initiative around connectivity would actually give us some good revenue increase in the second half of the year.
But I know you spoke about the forex. I'm sure you are very versed with the recent trends that we saw of the strengthening of the shilling against the dollar. I'm sure it was a happy moment for you. I don't know, but you tell me, what was your sort of like, how did it reflect on your books on this? Has your loan loss provisions, has your loans probably in your books really reduced by a significant number based on that increase?
Actually, the strengthening of the shilling was quite unexpected based on the trajectory it had taken.
Many others as well. Yes.
So it was really a very delighting moment from where I sit in two ways. One is that the forex and realized forex that we have just talked about, that actually now closed back quite a bit of those losses. If at all it sustains to the year end, then there's quite some good things for us here.
That should be your prayer, right?
Indeed it is. Actually, and even for the country, because that speaks a lot into the price of fuel, electricity and all that. But then again, from a liquidity perspective, the hard currency liquidity, we've had a serious challenge getting sufficient foreign currency to meet our obligations. I just mentioned that about 70% of our purchases in foreign currency and 90% of the loan book. So paying our monthly obligation, our cost of sales has been quite a big challenge in terms of getting sufficient foreign currency to pay that. So when the shilling strengthened and it appeared like there was quite some increased availability. It has really helped in terms of reducing the obligations. And you know how that goes. When you reduce the obligations, and then at the end of the period, you have a lower obligation to revalue, and that speaks to a lower unrealized forex.
Finally, as we come to a close of the conversation, shareholders are watching this and would really want to hear from your end. what are we looking forward to, especially from a perspective of the quality of your shares and even the quality of the company in itself? What assurances do you have for them, especially with this sustained growth that we are seeing?
Yeah, Maina, I think several engagements with the shareholders, I think at annual general meetings.
Yeah.
I personally have indicated that we expect a better performance in the coming year and all that. But the dynamics in this particular sector, in this entity, have really been quite, the operating environment has been quite dynamic. Now, what I would like to maybe specifically single out is the government's intent on these utility operating as a commercial utility. We have seen that all through in terms of the kind of the tariff approval, the new board, the MD, the stability in terms of the leadership of the organization, and now the balance sheet restructure that we are talking about. So all indicators are that the utility is now being set on a path to operate as a commercial utility, and we should see that in the share prices, and we should see that now going into a dividend to the shareholders. There was the restructure of the board that happened. Quite uniquely, where we have a state corporation, an entity that is majority owned by government, bringing in an amendment to the memorandum and articles of association, and approved all the way by the shareholders, to have representation of the minority shareholder in the board. Now, that really is a major one, and even from where I sit, I have gone through a budget approval process where the board members are saying you can't just budget for everything without looking at projecting to pay a dividend to the shareholders. So really I can see the voice of the minority shareholders being well articulated even at board level. And so going into the full year period, we expect really to see, and the initiatives that we've set in motion, the balance sheet restructure and all that, we expect really to see some very strong performance. We expect that to filter through to the shareholders and also to the share price, because I can tell you KPLC is one of the undervalued stock at the stock market.
And we hope to get some dividends as well as shareholders soon.
Watch this space.
Thank you so much for your time.
Thank you very much.
There you have it, Stephen Vikiru, the CFO right here at KPLC. Really optimistic that, hey, this is actually going to be sustained, and we look forward and wish them well in this particular endeavor. I leave you now with the markets. That's it right here on the Trading Bell.